Today, I would like to tackle the part, would breaking Google be good for investors and US in general? Okay, I think this is a very, very crucial data, and I want to dwell into it, all right? So first of all, last week, a US judge ruled that Google violated antitrust laws by spending billions to establish an illegal monopoly, becoming the world's default search engine. This ruling marks a significant victory for federal authorities challenging big tech's market dominance. Now, following this win, the US Department of Justice, DOJ, is exploring options, including the potential breakup of Alphabet's Google. So less drastic measures under consideration involves requiring Google to share more data with competitors and implementing safeguards to prevent it from gaining an unfair advantage in AI products. So if the DOJ proceeds with a breakup, the most likely targets for divestments would be the Android operating systems, which powers approximately 2.5 billion devices worldwide, and the Google's web browser Chrome. Additionally, officials are examining the possibility of forcing the sale of AdWords, Google platform for selling text-based advertising. Now, what this is what has happened and what is speculated if it happens, how they're going to split Google. Now, it comes the more important part, the meaty part of it, is that the possible effects of a breakup if that truly happens. Okay, so the prospect of a breakup raises concerns about its impact on long-term innovations. Why do I say that? Because if you look back into history, a historical parallel can be drawn with Microsoft. So which faced similar threats in the 1990s and the early 2000s. The company diverted time, the company as in Microsoft here, when at that point of time, they diverted time, money, and talent towards legal defense and compliance, stifling innovation and causing its stock to stagnate for a decade. And also, it happened like that. So some analysts believe that breaking up Google could hinder the company's progress in the AI race. And we know how important AI is right now, right? So in the AI era, data is the new goal. You have more data, the better, okay? Because the more data, the more integration, the better. Google possesses the world's largest data collection along with devices, chips, cloud computing, AI models, and AI assistants. Disrupting this ecosystem could impede the company's development, and this is not something that investors would be happy, because you see this. First of all, we need to see the next part. Google is a dominant force in AI research, publishing more top-tier papers than any university. And you can see from this chart, the top 25 institutions for top-tier AI research, Google is right on top, right there. Okay? And the second company is Microsoft, followed by Facebook, right? You can see that these top three companies. Then the rest are all universities, Stanford, Carnegie Mellon, MIT, and all, and so on. So if you look into this, if they deal with this, it's not only bad, but if you look from the US point of view, how is this breaking it up, challenging Google's dominance? How is it going to be a risk to the US? If you study in detail, you can see with the US locked in a struggle with China and AI supremacy, maintaining an edge in AI research is crucial for national security, including advancements in precision weaponry, cyber warfare, and intelligence gathering. So Google's contribution are vital to these efforts, raising the question, would breaking up Google help or harm these initiatives? Now, if you look into overall, there is also a situation before, okay? So the first we discussed risk towards the Google. Right now, we're looking at risk towards US. So in the past, there was such an event that happened as well. So example, the breakup of Bell Telephone Company in the 1980s serves as a cautionary tale. The dismantling of Bell's telecom monopoly led to the decline of Bell Labs, a powerhouse of mid-20th century innovation. A loss of profits and stability following the breakup stifled the streams of innovations that had been freely licensed at low prices, untimely allowing US telecom innovation to fall behind China's state-supported giant Huawei. Okay, so if you look further in detail, what happened to tech giants who did break up? We need to look, and you don't need to look that far. Okay, recent history, and I think everybody knows this company. If you have been investing in a tech bull, you will know Alibaba's breakup in March 2023 presents a different narrative. The company claimed that splitting into smaller entities made them more agile and valuable, initially exciting investors with prospects of IPOs and new fundraising, because you break them, you can individually, they're going to get more money, right, with new fundraising. However, to date, no such events have materialized, and Alibaba shares have seen decline below pre-announcement levels. Okay, although some argue that breaking up Google could unlock hidden value, like for example Jefferies Financial Group, analysts have noted that the market currently assigns little to no value to Google's cloud and hardware businesses, suggesting potential upside in a breakup scenario. Whatever it is, right? For now, Google would appeal the ruling. That's definitely going to happen, okay? And it would take years to know the final outcomes. We still have time, but nevertheless, as a conclusion, given the importance of AI in national security and global competition, the DOJ might consider alternative measures that ensure fair competition without fragmenting, breaking Google up due to Google's AI capabilities. This could include stricter regulations, enhanced data sharing requirements, or oversight to prevent anti-competitive practices while preserving Google's ability to contribute to critical AI advancements. A breakup could be more harmful than beneficial if it results in a significant setback to US AI dominance, especially in the context of global competition with China. So lastly, from an investor point of view, the breakup of Google carries significant risks, but also offers potential opportunities. The key question right now is whether the breakup would unlock more value than it destroys. Okay, so if managed well, it could lead to more focused, efficient, and potentially higher value companies. However, the risk of disrupting Google's integrated operations. Now, this is the key point right over here. If you need AI, more data, the better integrated they are, the better. So if you disrupt Google's integrated operations, especially in AI, it could harm its long-term competitive advantage, leading to a possible decline in overall market value. So right now, I think, probably it would end to a point just like Microsoft, where they share certain things, but not a breakup. So from a investing perspective, I think it will take some time before Google, the risk of Google actually breaking up could materialize. For now, I think it is still workable to look into investing into Google whenever price are depressed, because a very simple announcement of saying, hey, it's just a fine and you have to do this without breaking up, and that would alone drive the stock prices much higher. So at the end of the day, if you have a swing low, again a new swing low, probably breaking, let's say 154, 155, just around that level, start looking into it and see any support areas. And if you have like bullish price sections, yeah, slowly building into it. So if you can get around what we call prices in the 130s, 120s, even the better. Okay, so look into it. But anyway, when it comes to those prices, again, you can bet to your last dollar. I would be looking into it and putting into the reports. Now, buying them, we have been doing it with success so far. All the stocks that we have recommended have shown growth since we started buying them. Okay, so definitely when the opportunity comes, I will present it in this report. And with that, that's the report for today.